Okay, today what we are going to do is to look into reinvestment allowance. All right, this is additional allowance given by the government for companies eligible on certain activities. So the reinvestment allowance is another incentive. Yeah. So, but what we call, I have shared the scan chapter in the Google Classroom. Yeah, so what is reinvestment allowance? Right, look at the name, reinvestment, right? Means that it's the allowance given for you to invest. And in this case, we call it as a reinvestment. So you make additional investment, right? So normally company will invest into their capex during the first years of operation. So reinvestment means that this is the second round where the company invests, or the reinvestment allowance or the RA. Can you see the textbook now?
Yes, madam.
Okay. It's
Yes,
more
ma'am.
commonly known as a second round incentive for company which had exceed from the tax holiday of pioneer status or investment tax allowance. And this incentive is provided under Schedule 7A of the Act. So remember that previously we do have the company that applies for pioneer status, or you can apply for investment tax allowance. So the tax relief period is 5 years. So once you have finished your TRP, then you can then apply for reinvestment allowance, right? So reinvestment allowance, that's why it's known as a second round incentive, right? And it's available to manufacturing company and agricultural project. Yeah, it's not available for tourism. All right, last time we do have the tourism, we do have the R&D, all that. Yeah, so reinvestment allowance only for manufacturing and agriculture project. And then we also have the Public Ruling 9 2017 that governs for manufacturing activity, and the Public Ruling 10 2017 on governing agricultural and integrated activities for the reinvestment allowance. Okay, what do you mean by manufacturing company? It's only available if company have all the following conditions, right? So it's quite strict, but normally the conditions is that you are a resident in Malaysia, you incurred qualifying expenditure. So you must know what are your expenditure. In this case, you're talking about capital expenditure, and that expenditure incurred is for the purpose of expansion, modernizing or automating, or diversify its existing manufacturing business within the same industry. So later we look at what do you mean by expansion, what do you mean by modernizing or automating or diversifying. So in other words, in order for you to apply for a reinvestment allowance, or what we call RA, right, you must incur capex, and that capex incurred for the purpose of your expansion, modernizing or automating, or diversification. Right, and the other requirement is that the company must have been in operation for at least 36 months. Excuse me. Okay, so when I say 36 months, so most company will not have any problem with this requirement, because why? If it's a second round, if it is a second round incentive, means that first round they already have either pioneer or ITA. So pioneer or ITA is already 5 years. Yeah, so it means that if you must be at least 36 months, so maybe you are not under pioneer or ITA before this. So in order for you to claim for reinvestment allowance, you must be at least 36 months in operation, right? And the RA is available for 15 consecutive years of assessment. That's a very long period of time. Yeah, previously it was 10 years, now they have increased to 15 years. Beginning from the YA in which the capex first incurred, in the event the asset is disposed within 5 years, then the reinvestment allowance will be withdrawn. Yeah, so careful. So in this case, make sure that if you have incurred capex and you are under reinvestment allowance, so the asset must be held for more than 5 years before disposal. Otherwise, the whole allowance given to you will be withdrawn. All right, and then what else we have? 60% of that Alright, look at this. Para 1 of Schedule 7A provides that subject schedule company which is a resident in Malaysia, alright, you have 36 months operation and then incurred capex in the basis period. Plant, factory, it's not all, it's only on factory, plant and machinery used in Malaysia for the purpose of qualifying project. There shall be given the company for a wide area investment allowance amount equal to 60%. So this is the tax mechanism, right? The 60% of that capex. Alright, provided that such expenditure shall not include capital expenditure incurred on plant or machine which is provided wholly or partly for the use of director, individual who is a member of management or admin or clerical staff. So you must make sure that those capex incurred is for the purpose of the manufacturing business only, right? Alright, what do you mean by qualifying project? Here you only have one where it says that qualifying project means a project undertaken by a company in expanding, modernizing, or automating its existing business in respect of manufacturing of a product or any related product within the same industry or in diversifying its existing into any related product within the same industry. So in other words, it's again, remember that it must be a qualifying project. It's either expanding, modernizing, or automating. So, and then what? The other one is diversify, right? Diversify existing business into related product within the same industry. So when you look into B here, you have a box out there. So whenever you see the box in this textbook, it means that the law is no longer applicable because it was deleted. So in this case, it was deleted by Finance Act 2009. So when I say that qualifying project, it only refers to part A only. Yeah, part A only. So what do you mean by expanding, modernizing, automating, and diversifying? So we say that expanding refers to increase of a product capacity or expansion of factory area. Right? Increase of capacity or expansion of factory area. This must be evident by factual metric of the actual scenario. Modernizing means upgrade of manufacturing equipment and process. It could be replacement of new model, right? Replacement of new model, new enhanced plant and machinery. And then automating refers to process where manual operation substituted by mechanical operation. So that is automating. Diversify means to enlarge or to vary the range of products of a company related to the same industry. And this effective from 2016 subsequent YAs, right? And then they give you the definition of manufacturing. It means that it's a conversion by manual or mechanical means of organic or inorganic materials into new product, assembly of parts into a piece or machine or product, or mixing of material by chemical reaction process. However, this does not include, right, manufacturing does not include installation of machine or equipment for the purpose of construction, a simple packaging operation such as bottling, placing in boxes, bags, and cases, simple fixing, a simple mixing, a simple assembly of parts, any activity to ensure the preservation of products, and any activity to facilitate shipment and transportation. So you have A, B, B, C, C, D, D, E, E, F, F. All right, so all these are not included as part of the manufacturing. So because of that, you cannot claim your reinvestment allowance if you have this kind of activities. And you also have any activity of packaging or presenting of goods. And finally, you do have this II where you say that any activity that may be prescribed by the minister. So when you have this clause, all right, any activity that may be prescribed by the minister, so it's an open, it's very dangerous clause where it means that from time to time there could be some other activities that is prescribed by the minister which does not allow you to claim for your reinvestment allowance. All right, when we talk about simple just now, all right, what do you mean by simple? Is generally describe an activity which does not need special skills, special machines, special apparatus, or special equipment, especially produced or installed for carrying out that activity. All right, this one effective from 2016. So why is it so important for you to have all this definition? Because when you want to apply for the reinvestment, you want to claim for the reinvestment allowance, right, you have to make sure that you have to show them, okay, these are the expenditure incurred, all right, for that purpose. and it does not fall into the one that are not allowed. And then factory here means floor areas of building, or it could be floor areas of building or an extension of a building used for the purpose of qualifying project. So again, the qualifying project just now refers to the expansion of this thing. Right, and then it said that to place, install plant or machinery, or to store any raw materials, goods or material manufacture. So when we talk about the storage here, is restrict that the cost capex cannot be more than 30% of the total, or not 30, 10% of the total floor areas. All right, for you to qualify for it to be a qualifying project. And then plant here refers to manufacturing activity directly used in carrying out that activity. Machine, and then you have the new set to definition of plant machine has now really restricted the claim of RA to within factory only, right, from YA 2016. And then you also have be sure that this manufacturing, even though you are in the manufacturing companies, right, you do manufacture, the following activities are excluded from the definition of manufacturing. It means that if you are in the manufacturing of ice cube, for example, right? So ice making, say the law says that ice making is excluded from the definition of manufacturing, right? Ice making, cutting, sorting, cleaning, drying, grinding, mixing, grading of herbs or spice, right? And then you have the pre-mixed cement, concrete, all right, folding and shaping paper box, laminating, quarrying, mining or extraction of mineral, processing of photograph, baking, except if it's in the factory. Distillation or filtration of water, treatment of wastewater, mixing or blending of petroleum products, cleaning, processing, packaging or freezing of product, and painting, polishing. So it means that, right, normally we see this as a manufacturing companies, but actually under the law here for RA purpose, right, you cannot claim reinvestment allowance if you are involved in this kind of activities. Yeah, so there are supposed to be 20 activities. So we have the coloring of logo, right, stamping, printing logo on clothing, production of herbs and traditional medicine, production of sawn timber, photo state, recycle, and shipbuilding activity. So all these are not manufacturing for the purpose of reinvestment allowance effective from YE 2009. So far so good. Okay, then remember you have the 36-month period where the company must be in operation for at least 36 months. Yeah, 36 months is 3 years. So how you determine the 36-month period? All right, you say that, okay, you start operation on 1st of March, right? Operation. So if 1st of March, then you have 2017. So 2018, 1 year, 2019, 2 years, and 2019, 3 years. So it means that after 1st March, means that from 1st March 2020, you can now have the 3 years period. So it means that you can now claim your reinvestment allowance. Yeah. So if your 1st March 2017 year end is 31st December, you see that 1st March, 31st December. So you have about 10 months here. But then you have 2018, 2019, 2020. So by right, all right, during this period, you already have that 3 years. Yeah, you have completed the 3 years, 28th of February 2020. Right, you have the 3 years period. So it means that you have that from 1st March 2020 onwards, you have certified the 36 months period, so you can claim reinvestment allowance. Faham? Right, how you complete the 36 months is just that from the date of operation, you must complete 36 months, and after that date only you can claim reinvestment allowance. In this case, cepat masak, set account 28th of February. And then it says that 1st March 2017 to 28th February 2018. So this one is 1 whole year financial period. 1 year, 2 years, 3 years. So mean that from 1st March 2020 onwards, they can go for reinvestment allowance. Right? You are eligible to claim for reinvestment allowance. When say that it's for 15 consecutive years, it is a 15 consecutive years. It means that continuously, yeah, consecutive years too. All right, it's no longer based on project. So once you are given the RA, so you start claim for RA, then you can claim for the 15 consecutive years. Right, the new rule for reinvestment allowance applies from what, in 1998 onwards. Initially, previously it was 10 years, but now given for 15 years. And you can also be given another extension, right, that ranges from 1 to 3 years. So once is given an extension, all right, depends on which YA. For example, you can be given 3 years, 2 years, or 1 year. Why is qualifying capex? It refers to if you purchase outright, you purchase your capital expenditure. It means that you purchase your machine or you incurred expenditure on your factory, all that, right? So if it is by cash or loan, right, the total amount will be given as a qualifying expenditure. However, if it's under hire purchase, then you have to look into the capital portion made during the year. Yeah, so for example, if you purchase a machine under hire purchase, first year your qualifying expenditure would be your deposit plus your installment. Yeah, installment is only the capital portion, and then the second year would be the the installment portion. Yeah, the total installment made during the year. So that would be your qualifying expenditure for that asset. All right, so you have to total out total capex incurred for the company. All right, total capex incurred by the company in the respective years of assessment. All right, and then if you have a constructed building, you can claim industrial building is eligible RA if such is completed and put into use, right? So you must make sure that you have completed and then put into use for the purpose of automation, expansion, diversification, right? So if you have work in progress, so you cannot claim reinvestment allowance. So this one is different from your where you do your industrial building allowance, where you claim capital allowance on the building. All right, during the construction, you can start claim, all right, your capital allowance. But for the RA purpose, the building must be completed and put into use for the purpose of automation, expansion, or diversification. Yeah, then only you can claim reinvestment allowance. All right. Example 25.11, we have IL Rubber Manufacturing is a company involved in the manufacture of rubber gloves since 2013. In 2019, invest in a new factory, right? Office building and plant machinery to expand. So here you have the expansion. Expand of its existing business. So we have details where you have the cost of the factory is 1 million. Completed in use since 2018. So remember, you are doing that for 2019. Yeah. Cost of office building, is this qualifying? Right? No, because you can only claim capex on factory building, and if it's used for admin purpose, then the expenditure is non-qualifying. All right, and then you have the construction in progress. So again, WIP is not eligible. So in this case, the qualifying expenditure is only 1,000. And then you also have plant and machinery where you have the replacement of an old worn-out machine, right? And then you have 4 new production lines that increase productivity from 12,000 to 20,000 units per month. So this would be the qualifying, right? The office equipment is non-qualifying, and the replacement of old is not a kind of it doesn't fall into the expansion. What is it? Expansion, modernization, automation? No, it's not. Yeah. So because of that, the 500 and 700 is non-qualifying. Right. If you look into the competition of RA, you have the factory 1 million, four new production lines 3,000, 3 million. So total is 4 million. 4 million RA is computed based on 60%. Right, of your capex. So the competition of RA is similar to ITA. The difference is that is the name. Yeah, you have investment tax allowance where you have the 70% SI and to be set off against 60% of your ITA. For RA is similar, 70% of SI, then you have RA capex, how much is 60%? That will be your current RA, and then set off against your 70% SI. So it is similar. Yeah. And with regard to the related party transaction, effective from 2009, the company would not be able to claim RA on factory, plant, or machine acquired from related company in a control transfer situation. So assuming you have company A and company B, company A transfer their machine, company A, all right, have machine, which is they claim RA on that machine. Yeah, and then the machine was transferred to another company B, which is a controlled company. All right, so for that transfer, when you have company B cannot claim RA on the machine because why? Even though it's a controlled transfer, all right, you cannot transfer the RA. Yeah, you cannot transfer the RA. So once you transfer the asset to another company, so right, the other company cannot continue to claim RA on the same asset. So these are the control situation that we have covered when we did your control transfer. Example here, Aki Sdn Bhd and Hulu Sdn Bhd are wholly owned subsidiaries of CS Berhad. Both companies carry on manufacturing business, close account 30th of November. And for the year 30th November 2019, Aki acquired a grinding machine for expansion of factory from Hulu Sdn Bhd at 20,000. Right, so now Aki purchased from Hulu. Hulu acquired the machine on 1st January 2018 for 30,000. Compute the qualifying capital expenditure for reinvestment allowance claim. Right, assuming that annual allowance is 14%. So as both companies are related company in a group, the qualifying expenditure will be based on the RE of Hulu Sdn Bhd prior to the disposal, right? So in this case, expansion, yeah. Even though this one is expansion, if you acquire the asset from your related party, in this case, you purchase the grinding machine from your related party, right? That asset is not eligible to claim for RE. Yeah, why? Because it's a control transfer, so you cannot purchase your asset from your controlled companies. If you want to claim RA, you have to claim from your not a third party lah. All right, then only you can claim your RA. And whenever you have disposed of asset within 5 years of acquisition, then the reinvestment allowance given to you will be clawed back, right? Will be withdrawn. So what we do is that withdrawal in the we have a withdrawal of RA. Disposal here means sold, conveyed, transferred, assigned, or alienated with or without consideration. Alright, the 5 years period is by reference to the exact years and not by reference to year of assessment. So you have to look at when you actually acquired the asset and when is the date of disposal. From there you compute. Alright, and then withdrawal will be treated as part of statutory income. So if you withdraw, if you dispose of any of your asset within 5 years, so whatever the RA given to you will be added together as your SI. Yeah, so means that for that year you have to pay a lot more tax based on amount of RA that you have claimed in the previous years. It is the responsibility of the company to maintain a schedule of assets acquired and inform the tax authority as and when the disposal of assets occur, and also volunteer the withdrawal of RA, following which this may result penalty of incorrect returns or willful default. So what it means is that if you have under RA, you claim reinvestment allowance, and suddenly you have a disposal of asset for less than 5 years. So then it means that it is you at the company, you have to do the withdrawal. You don't have to apply, don't have to inform RB, or I'm going to withdraw for RA. No, you don't have to do that. You have to do voluntary. All right, it means that you have to do that manually, where you have to claw back, all right, for that year. And then if you don't, all right, they will penalize you, all right, for incorrect return. It means that if you have an asset and then you dispose of within 5 years, by right, you are no longer eligible for the RA. But if you do have that disposal, you do not withdraw, right? And then you submit your income tax return based on the normal reinvestment allowance claim, right? Then if the return submitted is what we call incorrect returns, and the penalty is 300%, right? Or you may also be penalized under willful default. It means that you know that you were wrong, but you keep doing it. All right. So that willful default under Section 114, the penalty is more severe as compared to Section 113. But remember, Section 113, the penalty is already 300%. Yeah, it's a lot. Yeah, so company must be very careful with regard to their acquisition and disposal of asset if they are under any tax incentive. Is that clear?
Yes, madam.
Yes, madam.
Okay, this is what you mean by disposal. All right, so even though you do not use the asset in the business, it's regarded as disposed. Yeah. So the rate is 60% of your capex. So it's similar to your ITA. You compute what is your capex for the year, then take 60%. That 60% is your RA for the current year. And the mechanism is that the 60% is set off against 70% of your SI. Yeah, so it's similar to your ITA. It's just that the first one you have ITA, now you have the RA. And you also have the RA exceed your 70% SI or RA below your 70% SI. So when your RA is below your SI, you will have the unabsorbed SI, right? And then will be added to the 30% of your SI. So remember that if you have RA, which is small, that cannot absorb 70% of your SI, so that 70% SI, you do have unabsorbed SI. So that unabsorbed SI will be added together with your 30% SI to be taxed at the normal tax rate. And mutually exclusive means that if you are under pioneer status or ITA, you cannot claim RA. So that is very wrong. Yeah, mutually exclusive. And whatever RA utilized during the year will go into your exempt income dividend to till. In terms of tax administration, for reinvestment allowance, there's no requirement for you to apply to MIDA. All right, you don't have to apply for reinvestment allowance. Companies which are entitled to claim RA submit 2 copies of Form EPS. Right, bukan earning per share, yeah. EPS with the original copy sent to the RIB branch, the other one you send to technical department. So it means that the company must know if they are involved in, if they are a manufacturing company involved in what we call qualifying projects, which is the expansion, automation, modernization, or diversification of their products, then they should know that, oh, RA is available to be claimed. So you must be make sure that you are more than 36 months in operation, then you claim your RA. So when you know that these are the capex that you incur, then you claim RA. Yeah. So you don't have to inform, it's just that you have to submit your Form EPS in the year that you claim your RA. Yeah. 2 sets of Form EPS, one to be submitted to RIB branch. So normally companies, we do have the corporate branch in Kuala Lumpur, and the other one to be submitted to the technical department of RRB. So when I was working previously, all right, this is things that I have to submit whenever a company apply for reinvestment allowance. Okay, in this example, 25.13, Solid Meranti Sdn Bhd, a company that manufacture wooden furniture, company decide to expand business by undertaking manufacture of wooden solid windows. So you're given 6 years, yeah. So normally under Pioneer or ITA is only 5 years, but because RA, the period is 15 years. So here example given is for 6 years. So the capex incurred is for land, factory building, plant and machine, furniture and equipment, and you also give adjusted income and loss and capital allowance. So once you are given the capital allowance, right, when you want to compute the SI, you don't have to do the computation detail, right, not based on this. Right, and remember that in the first year 2014, the company have adjusted loss of 5,000. Compute the RA and chargeable income for the company for all the relevant years of assessment. Okay. So the good thing about the company, in this example, they give you the horizontal or the tablet format where you have the 2014. These are the expenditure incurred. So you have the factory building and plant and machinery. Remember that the furniture and fittings are non-qualified expenditures. Similarly, land also is non-qualifying, right? So for 2014, you have 8 and 10,000, and then you have 5,000, 2,000, then you have 8, 16,000, 8,000 in 2018, but there is none in 2019. So you compute what is your capex incurred for the respective years of assessment. Then you take 60% as your RA. So 60% of that is this amount. So this is what we call the current year RA. Yeah, so the adjustment, we say that, okay, you have adjusted income, or remember this one, I prefer it to be 2 lines, right? Not negative income. And then you have the other adjusted income. And then the capital allowance given is brought forward 0. Current year, how much current year you have? For current year CA is 4,000. But because you don't have any income, it's a loss year, so you do not use any of your capital allowance, right? Whatever you have, you carry forward to next year. So next year, it becomes a brought forward figure, right? So here is 0, 70% is 0. There's nothing in the investment allowance. So they give you a separate computation. But remember, my formula is that I do it immediately lah. The investment allowance, what is brought forward, what is the current year, how much you available, how much you utilize, how much goes into your exempt income. All right. So let's go the SI, compute the SI first. All right. So you have brought forward 4,000 plus 3, 7,000. So you have income of 12. So that's why you have statutory income of 5,000. Right. 5,000, 70% is 3.5. So we do the SI first, right? So there's no brought forward, 5,000, so 7,000 SI, 19,000, 9,000, and 23,000. Okay, so you compute the SI 70%. So reinvestment allowance, if you show me you're working, all right, you should have the RA brought forward, RA for the current year, right? For example, here, RA for the current year is 10,008, 0 brought forward. And you do not utilize anything. Why? Because you don't have any statutory income. So everything that you have is carried forward to next year. Next year you have RA brought forward of 10.8 plus the current year 3,000. Where do you get the 3,000? It's from the 60% of your capex here, right? The 5,000 times by 60%, that's how you get the 3,000. So CA, RA for the current year is 3,000. So total 13,800. How much is 70%? 70% is 3,500. So because you had 13.8, you're going to utilize 3,500 only. So the balance you have will be carried forward to the following year. So in the current year, now you have a brought forward of 10.3 plus your current year, and then minus your how much you have. 70% is 4.9, so that's why you utilize 4.9. And this amount that you utilize goes into your exempt income. Is that clear? Right. And then you do for all, right? It's just that I want to show you that, remember that the 70% abated, so you still have your 30% SI, and then you also have the unabsorbed portion, right? Not utilized, we call it as unabsorbed SI. So do you have any unabsorbed SI? You do that in in YA 2019. So how do you get that? Where's your statutory income? You have 23,000 statutory income, right? But reinvestment allowance available is only, you have a brought forward of 1,400, but you don't have any here. Why you have no reinvestment allowance for the current year? Because in the current year, there is no capex incurred, therefore your is 0, right? So you don't have anything that year, but your 70% is 16,100. Your RA available is only 1,004. That's how you have the balance 14,700, which is what we call unabsorbed SI. Right? Again, your 70% SI is 16.1, but RA available is 1.4 only. So you have the unabsorbed SI of 14.7. So this unabsorbed SI will be added together with your 30% SI. So 30% SI is 6.9, and you have the unabsorbed portion of 14.7. Add together, that will be your aggregate income. And if you don't have any losses, you don't have any other income, that will also be your chargeable income. All right, so far so good. Are you clear about reinvestment allowance?
Yes, madam.
Okay, yeah. All right. So again, the computation is the same as your investment tax allowance. All right. Page 9. And then we have agriculture. Remember that just now that reinvestment allowance is eligible for manufacturing company and agriculture project. So this part is actually the second part of the reinvestment allowance that look into agriculture project. So the qualifying agriculture project is the same where you say that 60% of the expenditure set off against 70%. And company must be at least 36 months. So this is the general requirement. But the qualifying project is defined to mean agriculture project undertaken by company in expanding. Again, you have the expanding, modernizing, diversifying. All right, it's not enough if you are in a agriculture project, but for you to claim RA, the capex incurred must be for the purpose of expanding, modernizing, diversifying. All right, and then but again, it says that it's exclude the business of rearing chicken and duck. So now rearing chicken and duck, you don't get so much incentive, right? Because you cannot claim reinvestment allowance for this project. Previously it was, but now it was deleted, yeah. And rearing of chicken is until 2012 only. What is capex here? Capex under agriculture project, it means that the clearing and preparation of land, planting of crops, provision of irrigation, plant and machinery, access road, and then construct or purchase of building, including living accommodation, right? All right, chicken and ducks again is deleted. For the purpose of any of the following activities, cultivation of rice and maize, cultivation of vegetable, tube and roots, cultivation of fruits, livestock farming, spawning, breeding, or culturing of aquatic products. Yeah, so that is on the agriculture. And then any other activities approved by the minister. Yeah, all right. Income tax here, what we are talking here is that right, so this one is reinvestment in a qualifying project. Promoted activity or promoted product means any activity or product promoted under the Promotion of Investment Act. Right, so qualifying project means that this one is project undertaken by company in expanding, modernizing, automating existing business in respect of manufacture of product or any related product within the same industry. Or diversify in existing business into related product within the same industry. The other one is the agriculture project undertaken by company in expanding, modernizing, or diversifying cultivation and farm business, excluding business of rearing chicken and ducks. Okay, agriculture project refers to cultivation of rice and maize, vegetable, tuber. I think that this one is a repetition. All right, so for these, all right, what it says is that you get initial allowance 40%, 20%. So this is the CA, yeah. Mutually exclusive, it means that you cannot have the three. All right, you can only have one at a time, either pioneer status, either ITA or RA. All right, you cannot have two at one time. It's a mutually exclusive. All right, and then what is the meaning of fruits here? And pioneer company, effective from 2011, pioneer company is not eligible to claim RA in the same basis period, even though there are two separate businesses in the pioneer company. So again, for example, if the company have a pioneer status in one business and you have another product you want to claim RA, you cannot do that. Right? You have to wait until your pioneer period finish on that product, then only you can claim RA on another product. Okay. So pioneer status, so after you completed your pioneer status, only you can claim for your RA. Okay, this is one important. This one is also applicable for your investment tax allowance and your pioneer status, where it said that the claim of RA is 15 years. From effective 2019, any unabsorbed RA would be accumulated up to the end of 15 years. Thereafter, it will be continued to be carried forward and must utilize within a period of 7 consecutive years. It means that whenever you have RA carry forward after your, this is your TRP finishes, yeah, B. So you have the 15 years period, and then if you have RA which is still available, not absorbed, you can continue to claim against your SI. Yeah, but then there is maximum of 7 years. So this one also applicable if you have ITA carry forward, or even if you have pioneer losses. Yeah. There can only be set off against that. And after 7 years, if you do not utilize your RA or your ITA, the amount is deemed to be zero. And this one is very new, right? One effective from YA 2019. Recently we have budget for 2022, right? So that's for YA 2022, but this one was announced during YA 2019. And on the last page, it gives you a comparison for all the pioneer status and investment tax allowance. Remember this chapter 25, all right, you have pioneer status, you have investment tax allowance, you have small companies, I think, all right, a specialized industry, you have reinvestment allowance, right? So this a summary of your pioneer status and ITA for different industry. For example, you have the promoted product, promoted activity of national and strategic importance to Malaysia. The rate is 100% SI. Yeah, high-tech company is also 100% of SI. You cannot claim under technical or vocational for pioneer, but you can claim under ITA. Yeah, this one is 100% of adjusted income approved R&D. Right, this one is higher. This one is better because the abatement is against 100% of your adjusted income, so you do not claim any capital allowance in that case. Yeah. Contract R&D is 100% of SI. Okay. If this we have 100%, ITA rate is 100% against 100% SI. So a lot of exempt account here. Yeah. But in this case, it's not only promoted activity, but must be of national and strategic importance to Malaysia. Yeah. All right. So that covers your tax incentive from chapter 25. So we do have other chapters as well that look into your incentive and a lot more given by the government to companies. Yeah. So I will have you, all right. So any question on reinvestment allowance? Especially, all right, the question can come from the theoretical part as well as from the computation. Yeah. Any question? Everything so clear? No question. Okay. If there's no question, I will stop recording because I would like to discuss some other things with you.